The reason that professional investors and traders look at structural resistance and support lines can be shown in this tweet. 11 hours ago on X, I put out for Bitcoin above this structural resistance price, this one here, this line going through here, price could explode upwards due to a lack of structural resistance, and that's exactly what happened. We also know that no alt can escape Bitcoin's gravity. If Bitcoin is coming up, guess what the alts are doing? They're coming up as well. This makes it vitally important to know where structural resistance levels and structural support levels are on Bitcoin. And in yesterday's episode, I drew out the concept that this fresh air gap could be filled rather quickly. All charts are intercorrelated and interconnected, and it's important to also look at the Tier 1 total crypto market capitalization. We can see total just sped up as Bitcoin got over that structural resistance level. It's now interacting with the 1.089 structural now support level. We could see some fireworks inside crypto, but please make sure you keep your eyes on these lines. And you can get this indicator from ctksmethod.org. With a knowledge of structural support and resistance levels, you can figure out where price is going and where it will actually find resistance. And this is structural resistance inside Ethereum, marked up since 2015 with the standards-based CTKS method. It's vitally important to keep your eyes on the structural support and resistance levels of the Tier 1, Tier 2 and Tier 3 charts. We've just seen Bitcoin start to come up. It could really get explosive. The greatest gainers past 24 hours top 100: Rune, Solana, Render, Stacks, Sui, Matic, Arbitrum and Fracshare. The greatest losers top 100 past 24 hours: XDC, Link, LDO, GT, BitGet Token, Pax Gold, Tether Gold and True USD. If you'd like to check out the latest news, please pop across to ctksnews.com. When people first start trading and investing, it's a bit of a mystery how price moves, but you can see that the crypto market comes up when Bitcoin comes up. All price charts have price moving in a wave between structural support and structural resistance levels. LGRC1 had a terrific comment in yesterday's video. He said, "I want to address this to everybody looking and wanting to join the CTKS method service. I think I said this so many times, but it would be your life-changing investment 100%. The more dedication I put in understanding the markets, all the Tier 1, Tier 2 and Tier 3 charts, I understand, the more divine intuition I get on trades. This month was the most profitable month so far for me, and given that the price action, I'm eager to see what the future is holding for these markets." When Ken first released the CTKS method service, I'd drawn 95% of the charts and I was thinking, do I really need it? But I bought it right away anyway. After this period, I can say that this service should be at least $500 US per month and it would still be undervalued. All the details that Ken puts into the monthly service videos has made me love waking up to do my market check and search for opportunities. I can't even imagine how long it would take me to reach this level of knowledge without your kindness. Thank you, LGRC1, for your very kind comment, my friend. It's vitally important to look at the structural support and resistance levels across the Tier 1, Tier 2 and Tier 3 charts. The tweet that I put out on Bitcoin was because I understood what was happening inside the structural levels of not just Bitcoin, but all of the Tier 1, Tier 2 and Tier 3 charts. In yesterday's video, I was talking about professionals focus on price reality. They know the news, but they understand the news can be distorted. But it's important to know about. What is more important is the structural levels through CTKS structure. Across all of those different Tier 1, Tier 2 and Tier 3 charts, as well as having your three-dimensional risk management. This is a very different process than retail take. Retail typically only look at the charts that they're putting money into. All the rest of the charts are irrelevant. And this is why 95% of people lose money in the markets. you simply must know the market pulse. Looking at pure price action is one thing. You actually need to understand the structural support and resistance levels. Looking at market pulse also has some different focuses. When we see Bitcoin coming up like this, we knew that there were a lot of shorts around this structural level, just above it in fact. And when they got crunched, they pushed price up because there was nothing to stop it. Structural support and resistance are the only levels that you need to look at, and they're never drawn from recent price action. They're drawn from all of price action. The other thing to note, what's happening with Bitcoin's price momentum right now is dependent on so many different charts, many more than just Bitcoin. Bitcoin's price momentum is very much aligned to the inverted DXY. What we see is the DXY. I've just inverted Bitcoin here because the US government avoided a shutdown at least for the next 45 days. That means that the pressure on yields, the US 2-year, the US 10-year, and the DXY should lessen significantly. Bitcoin trades 24/7. It's predicting that the DXY is going to tank. Just to explain, because that blue line may be a little bit confusing, that's Bitcoin's price action. But Bitcoin's price action doesn't help us with the DXY, not in this manner. If we invert it, we get a much better picture of what the DXY is likely to do from a probabilistic stance. In financial markets, it's important to look broadly. If you're joining us for the first time, please make sure that you look at as many charts as you possibly can. Focus on the Tier 1, Tier 2, and Tier 3 charts. And then get to understand how structural support and structural resistance move price around. They are incredible predictors. Then layering your knowledge to understand how different charts work together or work in adversity with each other. Always know that there are two schools of thought inside every field of endeavor, a retail or amateur school of thought and a professional school of thought. The difference between the two is always very large. It literally takes decades inside financial markets to understand how the markets truly work. In your trading and investing journey, always make sure that you're seeking out professional level knowledge. And no, if you're not marking up all of price action, you're not seeing the full picture. Because you've stayed to the end, I want to give you a little bit of profitable insight. We can see that Solana has a structural resistance level at 24.52 and then a fresh air gap up to 26.26. That could be a very profitable gap, but remember how the markets work. All these charts are intercorrelated and interconnected. Solana can't escape Bitcoin and total crypto market cap, and it can't escape the DXY and yields. In other words, if you want to trade Solana profitably, make sure that you're looking at the FOREX pairs. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you in the next video. Bye for now.